The number of countries with negative interest rates is growing, up to 30% of the globally traded bond universe, according to JPMorgan. Now the question remains of what will the long-term impact of the global financial system look like because of this. Yahoo Finance's editor-in-chief, Andy Serwer, is joining us now. Andy, this is getting pretty disturbing, to say the very least.
Yeah, it's a really disturbing trend. I think you're right, Brian. And as you said, 30% of the global universe, that means all the government bonds in Japan, most of the government bonds in Europe, government bonds, all the government bonds in Germany, many corporate bonds in Japan and Europe as well, and even some corporate bonds from the United States, from Pepsi, Apple, and McDonald's that are euro-denominated. It's growing. It's about $16 trillion of debt now, carries negative interest rates, which is kind of a mind-boggling concept to begin with.
You had a great article, very in-depth on the Yahoo Finance site looking at this, but you spoke to Mohammed El-Arian, and he said negative yields could break things. What did he mean by that?
Well, it's because it's so unknown, Brian, and it's a parallel universe. I mean, if you think about it, basically, you know, as a lender, you're getting back less than you've lent, and as a borrower, you're just, you know, being able to benefit tremendously from this. It hasn't really hit consumers yet, but I think that it will at some point.
What do you think the consumer impact can be?
Well, you know, in Europe, actually, again, going back there where it's so prevalent, in Denmark, for instance, you are being paid negative rates as a depositor, especially wealthy people. It's not normal at all. So what they're doing is encouraging you not to have money in the bank. That means keeping it in cash or investing in stocks as an alternative. And then conversely, also in Europe and Denmark in particular, people are able to get negative mortgage rates. So as a consumer, you want to borrow from a bank because you're paying back less. You see how this goes?
This is
it's
crazy.
Completely upside down. And the real thing is, to my mind, it has all the hallmarks of potential for real trouble in the financial markets because it's unprecedented. It came out of nowhere. People are dismissing it. They think it's never going to happen here in the United States. And I think there's a real possibility, like Mohammed El-Arian said, it could really break things if it happened here.
What's the big chances that it could happen here in the U.S.? It seems to be that's where we're going.
Yeah, I think there's a real chance. And, you know, the same people who were saying, you know, Donald Trump would never be president, Boris Johnson will never be prime minister, are the people who are now saying, we'll never have negative rates here. And again, you know, so far the financial system's holding up just fine with these negative rates. But what does it really mean when you're paid back less? Yeah. I mean, obviously you wouldn't want to do it. So that means you start chasing yield. You start chasing risky investments. What are the implications there? It's a distortion. And I think it's something policymakers haven't really wrapped their brains around.
Doesn't that make sense to go rotate back into stocks? If we do hit negative rates in the U.S., why not plow into some of those stocks?
100%. But then what is that going to do to equity prices? Yeah. Send them to the moon and create some bubbles. Again, the distortion potential here is, to my mind, you know, again, unknown and potentially really dangerous.